Hey, good day, everybody. I thought I would just do the intro for episode number 1575 of the Creating Wealth Show live for you today. Let me just pull it up. There it is. Well, sort of there. It's not. No, it's not there. Oh boy, don't you love it when we're just so uncoordinated here? Well, we don't have a big staff like NPR does, right? So, that's the advantage you get when you're government subsidized. Anyway, hey, let's dive into a couple of things. We have got our guest today, Rick Sharga, is going to be on with us, and this will be a two-part episode because we talked about a lot of stuff. And there are definitely some vulture capitalists out there, and I don't blame you for being a vulture capitalist. I think that's an important part of the market because you are assisting with a very important economic concept called price discovery. Price discovery, very important concept, and that's what people do when they dive into a market and when they see ask prices at bargain prices, and they jump in and they take advantage of that, right? So some would call that a vulture capitalist, some would call it smart, and some would call it people that are just helping the economy move toward recovery. So, do you think there will be a big foreclosure crisis? Put your comments down below. I want to see those comments. Are we going to have a big foreclosure crisis? Are properties going to become a super bargain? And if they do, are you ready to pounce on those opportunities? Are you circling like a vulture, waiting for that to happen? Well, I hate to break it to you, but you just might be disappointed. So, our expert today, Rick Sharga with RealtyTrac, is going to be talking about that. And if you are watching on the live stream, you got to go to the podcast to get the full part of Rick's show. This is just the intro portion, and this will be on today's episode. But I want to show you a couple things that are really important. So let me advance the slides here. And of course, questions, comments, reach out to us, jasonhartman.com. If you're in the United States, 1-800-HARTMAN. That's a US only number. And be sure to see our legal stuff at the website, terms of service, etc. But look at this. This is great news, folks. FICO scores, that all important FICO score. Well, what is going on with people's credit? It's actually fantastic news. Yes, it is. The average US FICO score hit a record high of 711. Not like the convenience store 711, which, by the way, is changing its business model a little bit due to pandemic life. But I mean, that's just amazing. And, back in April, it was 706 a year earlier. That's pretty good, but it's even higher now. Now that coveted score is 720, and you can go higher. The highest score is 850. And what I've always said is that people need to be really careful bragging about high FICO scores because that could be a huge mistake. Why could it be a huge mistake? Well, you'd think a higher score is better, right? Not necessarily. You want to know why? I'm going to tell you why. Look at if you're looking at a balance sheet, everybody has looked at a balance sheet, right? Or where you're kind of analyzing your net worth, right? On one side, you've got all the assets in one column, and on the other side, you got all the liabilities. And when you subtract the liabilities from the assets, what do you have? Net worth, right? How much are you worth, right? How much is that painting on the wall worth? How much is all the real estate I own worth? How much is everything else worth, right? All the bank accounts and all that good stuff. Well, you take that, you subtract the liabilities, you have the net worth, but you know what people almost never put on their balance sheet to analyze their net worth. It is a huge asset, and they're not counting it. That big asset is the ability to borrow. Yes, the ability to borrow. And when you can borrow at historically low, literally negative interest rates, well, I probably shouldn't say literally, I should say virtually negative interest rates, because they're not literally negative interest rates, I guess. They are actually positive interest rates, but not much. They're not very positive if you're the lender, because hey, if the inflation rate is whatever percentage you believe it to be, and you've got tax deductions against that interest rate on that beautiful, wonderful, incredible 3-decade long fixed rate mortgage, then you have negative interest rates. You are getting paid to borrow money. You're getting paid to borrow money. So if you have a FICO score that is really, really high, I would say you're not using it enough. So I think there's a sweet spot. So many things in life have a sweet spot. What is the sweet spot on the FICO score? Um, I'll share with you another example about this: vacancy rates. So you hear investors talking about their vacancy rates in their properties. And some investors or property managers will get their chest all puffed out and say, well, we have 98% occupancy, only 2% vacancy in our properties because we are so good at getting them leased. Really? Are you sure about that? Are you sure you're so good? I say you're wrong. And here's why: there is an optimal occupancy, or the flip side is the vacancy rate, whatever you want to call it. Most people refer to it as the vacancy rate. Hey, is the cup half full or is the cup half empty? Yeah, depends on how you look at it. So, that optimum rate you do not want your properties 100% occupied all the time, because you know what that means? That means you are a sucker. Sucker. Yep. Only a fool has his or her properties occupied 100% of the time with no vacancy. Why do I say that? Because the price is too low. You're doing something wrong. Your rent is not high enough. You're not charging enough rent if you have no vacancies. You should have some vacancies. You want to target a healthy vacancy rate. 100% occupancy is a sign that your properties are too cheap. So raise the rent. Raise the rent. Now, if your vacancy rate is too high, on the other hand, what might that mean? That might mean that you're unrealistic and your price is too high, or your properties are in bad condition, or your marketing is bad, or your management is bad. And when I say your management is bad, I might mean you, if you self-manage your properties, and I might mean your professional, I say that in quotes, property manager, because so many of them are just not very good. But there are a few great ones out there for sure. So 711 is the highest historical FICO score. And that's where we are now. Ta-da! Great news, right? But and by the way, that's when FICO began keeping track 15 years ago, according to the WSJ. Wall Street Journal is an excellent newspaper, by the way. Well, I don't get the paper, but you get the electronic version, right? Stop watching all this crap news. The news on television. Television. I remember I was being interviewed on a TV show a while back, and the anchor person, after the interview, we got to talking a little bit about television, and he said something profound. He said, "Television is the idiot's medium." And when I was growing up, they always called television the idiot box, right? Now, there's certainly some good educational things you can consume on television, no question about it. But if you think about it, the format of television is so soundbite oriented. It's so quick and vacuous, and it's just very basic, right? You can't go in depth because there's just not enough time to go in depth on television, on traditional television. So you'd be much better off reading the Wall Street Journal. Okay, boy, I should really make some money from saying that. They are not a sponsor, but Wall Street Journal, pay me some money. You should be a sponsor. No, I'm just recommending them because they really, that's a great publication, Wall Street Journal. I don't like everything they do, but a lot of stuff. It's a lot better than that crap you'd read on the New York Times. Junk. Okay, now I shared something similar to this yesterday on the live stream, but this is not the same thing. This is different. Okay, so look at this. the top 10 markets with the largest two-bedroom rent price decreases. Yesterday, what I shared was a different chart with different data. This one's a little different publication. And oh, shame on me. I don't even cite the source because I can't remember. But I just clipped this morning from something I was reading. Every morning I read. I look at charts, I look at graphs. It's just what I do. I love this stuff. It's so interesting to me. Anyway, I got this one this morning and I don't remember where I got it, but I didn't make it up. It was from a credible news source. Let's just say that. I love when these news media sources, that's in the First Amendment. We have this idea that the reporter does not have to disclose their source, which is fine. That's a good rule, right? Because we want a free and open media rather than the stupid media we have today, with everything as a political agenda on every media outlet, which is totally ridiculous, of course. But soon this election will be behind us. And whatever happens, then people can start bitching about whoever's in power, right? That's what they'll do. But at least we don't have to have what we have now, because what we have now is absurdity for sure. So where was I going with that? Yeah, but when they don't disclose their source, and they say something like sources close to the matter say, or undisclosed sources say, when they really don't need to say that. This is not Watergate, where they were protecting Deep Throat. Remember Deep Throat? No, don't get confused with the adult film. Get your mind out of the gutter. Deep Throat said, "Follow the money," and that was the secret to Watergate, right? Follow the money. It's always follow the money. That's always the rule. But yeah, sometimes a reporter really does have to protect their source under what's called the Reporter's Shield Law, which mostly protects media, uh, and makes it not so they don't have to disclose their sources, which is great. It's awesome that we have this Constitution and the First Amendment and the Second Amendment, which makes the First Amendment possible, by the way. Just a little food for thought there. But yeah, a lot of times they don't disclose the sources, and they should. Really, they should, because they use that for their agenda, to further their agenda. But look at this: these rent decreases of these two-bedroom units in San Francisco down 21%. San Mateo down 11%. Santa Clara down 9.2%. That's all tech oriented, obviously, tech areas. You go to Massachusetts, down 8%. More Massachusetts, or Taxachusetts, we should say, Taxachusetts, 7%. Denver down 6%. DC, the bailout handout capital of the world, Washington, DC, 5.8%. Erie, New York, down, just rounded off. Dallas down 5%. Milwaukee down 5%, give or take. So what's interesting here is that you see the biggest decreases are in the high tax, high density, mostly high density, business unfriendly places. And that is the trend, right? The move is toward suburbia. The move is toward larger homes, 3 bedrooms, 4 bedrooms, etc. Obviously, sales have been booming in this type of category, and the move is away from, studio apartments, 1-bedroom apartments, and 2-bedroom places like this, right? So people need more space for home offices, for home gyms. Home is the center of the universe. I was saying that back in February as this thing was just starting to break out. Again, like what I talked about on the live stream yesterday, which was a much more comprehensive chart of these rent decreases. But this is a little bit different than that one. That one was for studio units, I believe. So interesting. And look at this. Now, this is a repeat from yesterday, by the way, because this, you just got to see it again. If you were watching yesterday, repeat right here. But this is absolutely shocking. When you look at the inventory levels of properties, think about it. since the Great Recession, 10, 12 years ago, depending on how you look at it, since the Great Recession, coming out of that, home builders have just not been building entry level housing. It's just almost completely non existent. I mean, we have just a little sprinkling of it. If you go to jasonhartman.com, click on the properties page, you'll see a little bit of it. Good quality, brand new investment grade rental properties, income properties there. But there is so little of this. And overall, there's a massive housing inventory shortage, except in these overpriced, overtaxed, business unfriendly, landlord unfriendly, left wing. How you voting in a couple of weeks, folks? These left wing disaster areas. It's like everywhere the political left controls, the places just become a disaster. These once great places, like the now Socialist Republic of California, my home most of my life, absolute disaster. New York, Massachusetts, same deal everywhere. But just look at the inventory levels in some of these areas. Now, this is an alphabetical list, so it's not in order by by what has the most or least inventory. But look at this inventory in Akron, Ohio, or Austin, Texas, down by Akron, Ohio, down by 54% from last year. There's less than half the number of homes for sale, and the median days on the market is 5 days, people. They sell in 5 days. That's how fast properties are selling. You just go down this list, it's pretty much the same all over the place. In Dallas, inventory's down 45% from last year. Homes are selling in 10 days, 10 days, 10 days faster. Okay. So it's really just absolutely incredible what's going on. And, you look at this, there are approximately 390,000 fewer homes than the 3.3 million listed during the same period last year. As of this week, the number of homes on the market is down 39% compared to last year. Now, when you listen to our guest, who's coming up here in just a moment, Rick Sharga from RealtyTrac, he was on the show like 10 years ago. I haven't had him on in a while. Apologies for that, by the way, because he's great. We joked a little bit about Rick, you got to come on the show more often. And so he's back. And we go into this idea of waiting for the big foreclosure crisis. Is there going to be a big buying opportunity for you vulture capitalists, you bottom feeders, you? Are you going to be able to, are you keeping your powder dry, as the saying goes? You got cash sitting on the sidelines, ready to buy a bunch of properties at half price. Is it going to happen? I don't think so. I don't think it's going to happen, folks. So, we're going to go through that here. Now, if you're watching the live stream, again, you got to jump over to the podcast, which will be released in like a half hour, the Creating Wealth podcast, and you can listen to the interview with Rick. This is just the intro portion. Rick is not here on the live stream, but he's on the podcast today, and we'll get his full interview with charts and graphs up onto the YouTube channel here soon as well. So without further ado, we've got to get to our guest. So many of you have asked about our asset protection webinar, though, so I just wanted to say that's scrolling across the bottom of the screen. Estate planning asset protection at very reasonable prices. jasonhartman.com/protect. That is a webinar given by a lawyer friend of mine. He really does a great job. You will learn a lot in that time. So check that out. And we will see you on the Creating Wealth podcast in just about a half hour for the full and complete interview. All right. Thanks for joining me for this quickie live stream today. Appreciate it. And happy investing to everybody.